In this video, we're going to learn how to fill out the second page of your 1040. So we're on page 2. We've already gone through how you get to line 38, your adjusted gross income from the previous videos. So here we have Fred and Edna. That's the example we're going to use. Fred and Edna are a married couple, so they're going to file a joint return. Their adjusted gross income is $64,000, so I am actually going to go ahead and put that on in here, $64,000. The next thing is lines 39A and B. We're going to ignore those, and we're going to go to line 40. And here's where you have that choice. You either are going to take your itemized deductions or the standard deduction, whichever is larger. Well, when Fred and Edna did their Schedule A, their amount was $9,000. Well, if you look on under standard deductions here for a married filing joint, you can see that you get $12,400. If I can highlight, there we go, $12,400 for the married filing joint return. So since that's larger, we're going to put the $12,400 amount here on line 40. The next thing is a subtotal, and that subtotal is $51,600. So again, it's your AGI minus the higher of your standard deduction or itemized deductions to get $51,600. Line 42 is a good one in that you get to reduce your adjusted gross income further by $3,950 times the number of exemptions you're allowed. Well, as far as Fred and Edna go, they are entitled to one for Fred, one for Edna, and they have one child. So they get 3 times $3,950. That comes to $11,850 that they can still further reduce their adjusted gross income by. The net of those is your taxable income, and that's $39,750. Now at this point, we're going to have to do a calculation. We're going to have to use the tax schedules to determine the amount for line 44. So what you have to do is get your tax rate schedule, and you have to use, because they're the married filing joint, we're going to use the Y1 schedule. Their taxable income of $39,750 falls in the 15% tax bracket. So they're greater than $18,150 but less than $73,800. So to calculate, then you go and you take, I'll show you down here, you're going to take that 1,815, which is the 10% of the first 18,150. You have to then add to that the amount over 18,150, and they had 39,750 as their taxable income, and then we'll subtract the 18,150, that's at 10%, and multiply that all by 15%. That calculation comes to a total tax of $5,055. So going back to their form, we will put in there $5,055 in taxes. We'll be skipping lines 45, 46, 47 is just a subtotal. But now I want to talk about the credits. These are great. They reduce your tax, and their tax being $5,055. So it's a nice benefit if you have the ability to claim any credits. Well, let's see what Fred and Edna are able to claim. If you look here, the next thing we have on them is that they are eligible for the child and dependent care credit. So basically, if you're working and you have a child, or even an adult, a parent, let's say, that that is dependent on you, you get to claim the child care costs, but again, it's based on a formula. So theirs comes to $300. That's line 49. The education credit is great. I mentioned that earlier, but here it is. They paid $2,800 in tuition and $400 for books, so they paid a total of $3,200. The American Opportunity Credit works as follows. You take the total costs of tuition fees and course-related materials. Of that, the first $2,000, they get all of it. The amount over $2,000, but under $4,000, in other words, the next $2,000, they will get 25% of. And so they spent, again, at $3,200, so that they'll get 25% of that extra $1,200 that they spent. So as far as what does that come to for them, that gives them a tax credit of $2,300. So that would go again on line 50. Oops, sorry, line 50, and the amount was $2,300. Again, you get 100% of the first $2,000 and 25% of the next $2,000. We won't deal with line 51. Line 52, you get $1,000 for every child under 17 that's a dependent. Residential energy credits, you can get those if you buy energy efficient, and they have to have a particular seal or logo on it to be eligible, but that's to encourage energy efficient purchases. Line 55, we won't have anything for line 54. Line 55, we just add up all our credits, and when you add those three up that we have on line 49, line 50, and line 52, you get a total credit of $3,600. So $3,600. You subtract your credits from your tax, and that comes to $1,455. Now they don't have to get a checkout for $1,455 because they have had some federal income taxes already taken out of their paychecks. So I'm not going to cover anything from this section, but if you were self-employed, some of these would apply in real life for you, but less likely. What we are going to have to deal with here is line 64. That's where you determine right out of your W-2 how much federal income taxes were withheld. And in this example, I give you that amount, and it says here that federal income taxes of $2,200 were taken out of their paycheck already. We don't want to use the state income tax, Social Security, or Medicare. Those don't relate to federal income taxes. So again, the amount taken out of their paychecks already according to the W-2 is $2,200. We won't have anything related to the rest of these, though I will say line 68, I put all of the education credits on line 50, but in reality you split it between this line 50 and line 68. But we're going to keep it simple and put the American Opportunity Credit all on line 50. All right, after you figure out that difference, you either owe money, so in other words, their tax is $1,455, but they've already paid $2,200, so they have overpaid. So that difference would go on line 50, and they should get a refund. If by chance, though, the amount of their tax happened to be greater than what was withheld, then they have amounts that they owe, and it would go on line 78. So it's either going to be 75 or 78, depending on whether they overpaid or they get a refund. So I hope that helps you with filling out the second page of your 1040.